Welcome to Shorthand Dictation Practice. Today's dictation, Shorthand Transcriptions, by Sir Kailash Chandra. Transcription number 76 at 80 words per minute. Get your pen and notebook ready. We will start the transcription in 5 seconds. 5, 4, 3, 2, 1. Start. Transcription number 76. I shall now give a brief survey of the provisions in the bill, which are designed to encourage investments in productive enterprises, to stimulate higher productivity, as well as exports, and to provide resources for the expansion of industry, in order to encourage investment by individuals and Hindu undivided families in the equity shares of new industrial companies in India. Provision has been made for the grant of tax-free tax credit certificates to them, with reference to their subscriptions to eligible issues of capital by such companies for a period of 4 financial years commencing with the financial year in which the investment is made. The amount of the tax credit certificates is to be calculated on a slab system of rates and will be limited to 4,250 rupees for each financial year, or a total investment of 30,000 rupees under the original provision in the bill. Only the first subscriber to eligible issues of capital qualifies for the tax credit certificates, considering the fact that a substantial part of the capital issues made in recent months has had to be taken up and is still held by financial institutions which underwrote those issues. The eligibility for tax credit certificates has been extended to individuals and Hindu undivided families who purchase shares forming part of an eligible issue of capital from an underwriter declared as such in the relevant prospectus. Incentives for increased industrial production, as well as for the more efficient use of the capital already invested, are provided in the form of tax credit certificates calculated with reference to the central excise duty payable on increased production in the relevant year over that of the base year, and with reference to the additional amount of corporation tax payable by a company in the relevant year over that payable by it in the base year. The amount of the tax credit certificates granted for these purposes is required to be used for discharging debt obligations, acquisition of capital assets in India including construction of a building, for the purpose of the business, and in the case of a company, also for the redemption of its debentures. This would enable industrial units to pay off the monies which they had borrowed for expanding their productive capacity, or alternatively, to plow back a larger portion of their current earnings for the purpose of expansion. Transcription number 76, continued partially. Reconstructed, source page degraded. The following is reconstructed from a partially legible scan. Some phrasing is approximate. The Ho Finance Minister's budget proposes to provide some more incentives to industry on a limited basis in order to meet the changes under which it has to work, to help it in a difficult position. The tax credit with reference to the value of new issues would provide an impetus for raising fresh capital and augment our resources. In this connection, it is proposed that a board be set up to advise government on tax credit matters, on which commodities the credit should be granted, and also on the applicable rates. Government will, if necessary, invite trade and industry representatives to present their case before this board, which will consist of a secretary and a few senior officers, each concerned with the commodity in question. And government will take an informed decision after considering the recommendations of the board on the grant of these tax credit certificates. Other channels for encouraging investment include a modified form of the tax credit certificate for individuals and Hindu undivided families based on the value of their holdings of shares of industrial companies. This benefit will be available to individuals and Hindu undivided families on the shares held by them in a company, provided such shares form part of an eligible issue of capital made by the company, and the certificate will extend over successive assessment years, commencing with the assessment year next following the year in which the company issues the shares, or for which it is granted the certificate. The bill also proposes a scheme for voluntary disclosure of unaccounted income earned up to the 31st of March, taxable on the amount so disclosed at a rate of 60% with a reduced rate where the disclosure and the tax payment are both made before a certain date in 1985, where the tax on the disclosed amount is paid within the stipulated period. The assessee will have the option to pay it in installments over a period of months. from the date of disclosure, provided he furnishes adequate security from a scheduled bank. Stimulate, encourage. Slab one particular income category for tax purposes. This completes today's dictation. Practice well and see you in the next session.